Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update for commodities. We're going to work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as I go through it. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all of these topics and subjects, looking for potential investment opportunities and sharing that with everyone in the community. I also share a lot of macro stuff as well on commodities specifically because that's what is cheap, commodities and precious metals. I do have a special coupon code going on. Special is that coupon code if you'd like to join. And you can see the deals in the description link below. So let's dive in, take a look. We've got the DXY here. DXY holding steady. DXY is holding steady. We are up 0.02%. And what we saw with yields, our yields are declining across the board. When you see a DXY that is holding steady like this with a pretty strong move lower in yields, that does mean that there's a little bit of fear in the air. That is fear, and people are running to the dollar, and they're running towards the bond market simultaneously. That's a fear in the market. Usually what occurs is the dollar goes down with interest rates if fear is not in the market. The 2-year yield down 2.4%, pretty big day. We still have some support here with these wicks at the bottom. We'll see if they hold or if we have a further surge lower for the 2-year. Now, if you take a longer term view, we have broken out of this kind of consolidation, this upward consolidation to the downside. We've got a return move upward, and now we're rolling over. So I do think we could potentially see lower yields on the 2-year, get into this box somewhere down there. The 10-year yield is also falling. It's down 1.86%. We are underneath resistance, which is this line going across there. That's resistance coming back up through it. And we're getting some resistance there, and we're starting, we sold off a little bit. We'll have to see if there's follow through to the downside or not. And then the 30-year yield also dropping 1.13%, but we're still above support. And we've got that nice big bullish engulfing keeping us up here. So we'll see where that goes. We've got TYX, TNX ratio moving up quite dramatically today, 0.76. When this moves up, the curve uninverts, and that's generally good for gold. But today, gold did not go up. But that's generally a good, gold did very well here, and I think it will do well here as well. We've got TLT bond prices up 1% on the 20-year, but still below a lot of resistance. We have a lot of work cut out ahead of us. If yields are going to go down and bond prices are going to go up, it's got to start breaking through some of these resistance. It's going to take a lot of money, man. It's going to take a lot of money. The 2 and the 10, we did get some uninversion here, and it is coming back. I think this is scaring the market. We are underneath that 1-to-1 relationship, so the curve did uninvert the 2-year and the 10-year. And if this does continue lower, that does mean that we could see a recession or a slowdown in the market. This is one of the metrics that I watch. The other metric, if you want to see, is the U.S. construction, residential U.S. construction employment. That has not rolled over yet, and it rolled over in basically all of these areas. So gold's down $23 an ounce. I'm surprised to see it down with the conditions that I saw in the 2 and the 10 and the yields dropping. I have a big question mark. Is this a legit candlestick today? Was it managed? We have a lot of selling, candlesticks through here recently, but gold generally does really well under the conditions that we have. But there are times where if everything does sell off together, which today everything was selling off, this could sell off some. And that generally occurs in the beginning stages of these sell-offs, which we could potentially be in. Silver also sold off 1.2, but we're still above all the support. It still looks great. Platinum sold off a little bit, minus 0.27. We're still squeezing in the corner here. Platinum and crude oil moved together. They're very inflation sensitive, and we're still squeezing in the corner here. Maybe we get something that comes in the future here. I'll have to wait and see. Palladium down 1.3%. We're still above the support area, and we're holding on. Still looks like a bullish formation to me, like a big flag pattern that could potentially go higher. GDX down, GDXJ down, SILJ down, and I think everything was down today for the most part. So these were down as well. XAU and gold ratio was down a little bit, 2.5%, still above support. This is still at an incredibly cheap level. I will say, with the market conditions the way that they are, the uninversion of the yield curve, rates coming down, potentially the dollar coming down too, we could see this go up dramatically, because we could see gold and silver mining companies outperform gold, that go up. Oil could stay cheap, and maybe gold continues higher, and you get a big margin expansion for the gold and silver mining companies. So that's generally a good thing for cash flow. We've got crude oil down 1.58%. We are kind of still at this support. We could dip below it. We could dip below it, and we could go down to $60, and maybe we hit the $50. Now, if we get down there, guys, this is not good for the markets, period. Why is that the case? It's not good for the markets because you're underneath the cost curves of the higher cost producers. You're going to see supply go down. It's going to create a spike in the future of oil, probably a big spike, and in oil prices. I don't know how much supply we've got in the market. I don't think it's all that much. We're not seeing huge inventory inventory additions, which we normally see during this time of year. We've been pretty lean. So I don't know. This isn't good. We want to hold it where oil companies can make money and that we don't get these huge spikes. To me, if we get down to 60 or $50, it's probably going to create a spike at some point in the future. TTF gas up 2.9%, but the momentum's still to the downside. We could easily see a rollover here with this momentum coming back down. We've got natural gas in America that looks decent, but we did get a lot of selling pressure today. A big wick at the top. I don't know if the overall markets had an impact on it, but we are above good support here for a continued spike higher, in my opinion. Our boy XOP, yeah, you know me, holding steady. We are holding steady. We're down 0.02% today. Now, it can't hold steady forever. If oil prices continue lower, I do think XOP will head lower with it. But right now, we're holding steady. If oil prices start to move higher, we might have a chance to go on up, but it doesn't look that great in the short term. Momentum is to the downside, and our bounce is not that big at the moment. OIH down 2.5%, getting a little bit more selling pressure in this one versus XOP. And this does look a little bit ugly. We can throw, an upward channel there. We've broken out of the upward channel to the downside, and we've been consolidating here. And this could be a potential break lower, which we've got heading lower here. How far will we go? Difficult to say. The valuation of a lot of these energy service companies are extremely good. The cash flows and the businesses are good. This is driven by the overall market here getting scared and skittish. We've got Newcastle Coal Futures surprisingly up 3.8%, looking like it's trying to bottom here. Surprising. Oil or natural gas has been pretty strong, and maybe it's starting to have an impact on oil too. We've got Sprott Physical Uranium Trust down 3%. We're at the bottom of support. We'll see if that holds. We're still in this gigantic flag pattern. This guy here, still looking okay. We've got uranium futures down slightly, 0.23%, slowly leaking off. We've got URA down 3.4%, but again, everything's getting sold off today. It does have a little wick at the bottom. That is good. Sometimes you get these little double bottoms, and maybe we can see some follow through tomorrow. Maybe not. We'll have to wait and see. URNM also doing a little wick at the bottom. It doesn't mean that it was just completely sold off nonstop. We got a little buying pressure towards the back end here. Short term, we could see a bounce higher. We'll see if there's any follow through. And again, the short term, anything can happen, guys. If the market continues to sell off, this could easily get dragged lower with it. Easily. But we'll see if we can get some buying pressure here. URNJ in a similar situation, pulling back a little bit more than the others as it is the junior companies. We've got copper down slightly, still looks in a bullish formation. We're trying to break out of this pattern here. We'll see if we can get up there and close higher versus where we're at today. There's a bunch of selling pressure with these wicks at the top. They're getting reversed as we get up there quite quickly. We got COPX down 3.5%, was not spared. Everything was getting sold off today for the most part, but we do have a little wick at the bottom. It's not too bad. It's not the end of the world. It's not a domination selling candlestick where it closed at its lows with a bunch of momentum. We got iron ore down slightly. It looks like it's trying to find a bottom here. We'll see if it can find one. This is a bullish formation, and China's doing stimulus, which impacts iron ore. We've got aluminum at resistance, trying to break. It's still stuck there. Nickel's up 1.4%. I thought I was misreading it, but it's up compared to everything else. Looking like it's trying to put in a bottom and move higher. This is all positive, guys. These are all base metals that are trying to break upward. At least aluminum, that's at resistance trying to break higher. Copper's at resistance trying to break higher. This doesn't look like a recession to me, but who knows? We've got Mu down 0.4%. That's also looking good compared to what the other sectors that look really bad. We've got emerging markets that is down 2.4%. KRE down 4%. That's looking a little bit more rough as we break away from support. We've got TAN down 0.85, which I would consider to be a win compared to a lot of these other sectors. Lithium down 2.2. We've got this big consolidation here, and I do think it'll break higher with time. It won't break higher if you've got the NASDAQ dropping like a rock. Yep. REMX doing a retest thing. It's right on doing a retest. We'll see if we can get a move higher or not, or if the overall markets will drag rare earths down. This is really cheap, guys, and look how cheap we are here. This thing is low. Get low, get low, get low. There we go. Baltic Dry Index up 9%, but I think that was last Friday. I don't know what it was up today. I think it was up a little bit today, but that looks better and it looks fine. We've got XHB home builders surprisingly holding steady, and I think they're holding steady because of the lowering of the 10-year yield. There we are. It's trying to break out. We'll see if we can get any follow through. Russell 2000 down 2.7%, looking pretty ugly here. And we're breaking through support to the downside. We've got the S&P 500 looking pretty ugly, down 2.7. Now, it didn't close at its low. There was some buying pressure in there at the bottom. So, again, we'll see if we get a bounce higher or something like that. The NASDAQ getting ripped. That's getting ripped a new one, down 4% today. These are distribution candlesticks like I thought they were. And here it is going lower for the NASDAQ. So that's not looking too hot there. And we could get dragged lower in commodities for a little bit, and then we'll separate from it and divert from, I think, the NASDAQ and S&P at some point. We've got the SMCI trying to put in a bottom, looking better than some of the other stuff. NVIDIA fallen 5%. That's looking pretty toppish to some degree. Bitcoin down 5%. The liquidity measure, this is not looking too good. And then Ethereum down 7.8%. This is looking, from here onward, look at all the big red candlesticks. Those are all distribution candlesticks. And then your consolidations are aiming upward like that. That's bearish, not bullish. In your bull markets, when you come up, you get large buying pressure, and then you have downward facing patterns that oh my goodness, that occur. And then what happens is eventually that'll rotate, and then you'll get upward facing patterns. But that's what I see right now, and right now we're still in a pullback. MicroStrategy down almost 17%. That's a pretty rough ride. We'll see if it holds here, or if this is more of a topping pattern that ends up going way down. I'm not sure about that. It's tough to call tops, but there's another thing that it can do. This could be a stage 4 kind of consolidation, which you see, and it breaks upward. This is wave 5. 4 is down here, 3 is here, and then third is this leg upward. But we could see a peak. It comes on down, and then we could do something like that, which is a possibility. And again, I don't know for sure. I'm just making this up, guessing. But we'll see how it actually scribes out. And then the VIX is spiking up 19%. I drew this trend line there saying, well, if we start to move higher, we could see the S&P 500 go lower. Well, here it is breaking out. And we'll see how high it goes. But we're in a fear event, where people are fearful. We can see that in the dollar being steady and interest rates falling. And that's kind of where we're at right now, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.